Well, hi there. Welcome to Markets Tomorrow right here on 18 in the Mumbai News Centre. I'm Tanveer Gill, and it was a sluggish session for the markets. The way the indices came off in the last hour of trade, in the last 60 minutes, that is, sub 7750, and with serious put build up at the 7700 mark, seems like the market believes that for the near term, the range would be capped between those 100 points. We'll talk about the market session as always with our panel of guests, voices lined up on the show, include Nilesh Shah, MD Kotak AMC, Mayuresh Joshi, Fund Manager Angel Broking, Manav Chopra will help our viewers with trading ideas to approach the session tomorrow. But to the clear headlines in the session and the headline makers in trade today. Start off with the fact that there was weakness in the markets that came in from all quarters. Even Europe was trading a bit weaker in the noon session of trade. So Qs were not very supportive, and that's why the market actually gave up gains in the last 60 minutes of the session. It was almost 70 points off from the day's highs at 7,800 odd. Put writers were active at 7,700. Almost 10 lakh shares were added at that level, suggesting that there is support building happening there. But remember, selling pressure continues tomorrow, and given that we are stepping into expiry session on Thursday, you may see 7,700 also being taken on the downside. ITC was a star stock of the day, extending out gains on the back of good results and bonus announcement. Brokerages were very upbeat about the cigarette business outlook, so that helped the cause for ITC in the session. I can't jog my memory to recollect when was the last time actually that ITC gained in a single session 5%. So that was telling in terms of historical data and stock patterns on ITC. Patel Engineering surged in the session. Sabhav Engineering was active as well. Patel, of course, surged on the back of their joint venture winning a big order over 2,000 crores there. Another key move on the back of strong earnings was TTK Prestige, rallied on the back of good margin expansion, good quarterly show by the company. Cox and Kings, on the other hand, tanked on the back of a very poor earnings performance, a loss of 300 crores reported for Q4. And then, of course, another stock that reacted poorly to earnings was Britannia. But remember, this stock has gained 200% over the last 2 years. So today's 8% fall just looks like a bit of a correction and a blip in an otherwise upward trending stock price for the FMCG major. The question that we are asking today is, will the Nifty fall below 7,700 this week? Is volatility likely to be that high? And will the series also close below the 7,700 mark? Mayuresh Joshi as well as Manav Chopra both join us for this leg of markets tomorrow. Good evening to both of you. Manav, I'll start off with you first. Is 7,700 looking vulnerable?
Yes, absolutely. I think looking at the formations on the daily chart, the index has formed a bearish head and shoulder pattern, and usually such formation indicates a short-term high in place. I think the kind of rally that we've seen from the March lows, we can expect a short-term retracement rally, and the current decline that we are anticipating would actually be corrective in nature. So this decline should be taken as an opportunity for entering long positions or a medium-term long-term investment opportunities at lower levels. Looking at the momentum indicators on the short-term charts, it looks quite it's looking that the markets would breach on the lower side, and a break below 77.20 on closing basis would eventually open up the gates for 75.40 to 74.20 on the lower side.
Okay. Mayuresh, what's your sense? Fundamentally, do you think with earnings out of the way and a couple of weeks to go before the next Fed meet, clarity coming in on monsoon as well as the Brexit vote slated for end June, that the market will pretty much be in no man's land with a bias towards weakness?
Oh yes, Tanveer, and I think this is what I expected for the larger part of May, and this is what precisely has turned out. Yes, I think the global volatility will have its toll on global markets, including India, and the risk of trade will continue. What happens with Brexit, what the Fed decides in the upcoming policy are going to be key determinants in the way markets shape up going forward. And domestically, our own sense is that the factors related to monsoon are largely priced in. However, I think once we start hitting the monsoon season over the next 2 to 3 weeks, and if they are really good as per the initial analysis, my own take is that that will be a key trigger point for the markets and a lot of allied sectors which are dependent on the monsoon. Till that point of time, my own take is that the markets in range would continue to do so.
Okay, then let's talk about the stock stories in the session today. ITC. Is it a one-quarter wonder, or can the markets expect more from the company in terms of surprise on earnings, and that will translate into a stock going beyond 400, which has been really the resistance for this one over the last 3 years, Mayuresh?
I think the numbers have surprised positively, Tanveer, both in terms of how the top line performance has been and specifically how the cigarette performance has been. So when a lot of analysts were expecting some amount of degrowth to probably creep in, they're probably surprised on that estimate as well. Now, cigarette accounts for a majority component of the company's EBIT, and the other FMCG business has given a very tepid performance vis-a-vis whatever has happened in terms of input costs which have risen over the last few weeks. Having said that, I think the other businesses that ITC has got need to have a meaningful catch-up done, whether that be the agri-related business, which has done reasonably better this time round, but the hotels business, the paperboard business really need to show drastic signs of improvement, specifically on the EBIT level, so that the consolidated numbers start improving for ITC and the dependence on cigarette as the sole EBIT driver for the company starts coming down. Having said that, I think the cigarette business is expected to hold up with lesser than expected excise duty hikes coming through. The performance has been exemplary. So in my opinion, again, I think from a short to medium term perspective, the stock might probably move in a range, but investors holding on should continue holding on to ITC with a long-term perspective.
Okay, fair enough. The other story that comes to mind is Britannia. Is this just a blip, a correction in an otherwise upward trending stock, Manav?
Yes, actually this stock has been in a corrective decline since quite some time, and the kind of descent that we've seen in the past few trading sessions, and especially the stock has seen a very sharp gap down opening and did manage to close near the intraday lows. I think eventually the stock would see its retest of its March lows of close to 25-20 levels, but eventually I think this is a good stock, and the primary trend of this stock since past 7 to 8 years in a very strong uptrend, so it's a good opportunity for entering at lower levels. Monthly support for the stock is at 75.20. I think that could be a good range for someone to enter at low levels.
There was also TTK Prestige that did well on earnings. Mayuresh, what's the call here?
Well, the stock has done exceptionally well, Tanveer, and again I think if you look at the margin performance this time round, it has exceeded expectations. Now going ahead, what happens with all the product lines, whether that be cookware, cooking appliances, and the kind of distribution network and reach that the company is planning to embark upon, specifically in the northern parts of the country, and that probably has a telling effect in how the north-south ratio gets divided. I think the earnings estimates or the earnings expansion should be quite reasonable. Again, I think investors holding on to this stock should continue holding on, because I think within the consumer durable play, I think TTK Prestige probably has survived bad macroeconomic conditions, and if the macroeconomic conditions specifically in lieu with monsoons and rural demand expected to pick up significantly, the latter half of FY17 should be even better for TTK Prestige. So in my opinion, I think investors holding on should continue holding on to TTK Prestige.
Okay, fair enough. I also want to get in a quick view on Patel Engineering. A big spike on that stock, 10% higher on that order win by the joint venture. Do you track this one, Mayuresh?
No, we do not track this one.
Sadbhav was also active. Do you have an opinion on the entire space? Because, you know, with order flows coming in, do you think there is perhaps that added tailwind that the sector has been sort of demanding, so to speak, over the last 2 to 3 quarters, and that's really giving some sort of assurance that, you know, there is recovery which is stepping in, even though slowly?
Well, yes, as a sector, I think we remain extremely optimistic on the entire road play. With the kind of statements that have been coming from the road minister, Mr. Gadkari has been very vocal in terms of how much outlay is planning out, how much roads he expects to construct, and that possibly has a telling effect in terms of the kind of orders one really expects to come through. Now, again, one really needs to divide these players into three categories. One which is basically catering onto the EPC kind of business on the roads and highway side, one which is having a mixed model of both the portfolio as well as the engineering and construction portfolio, and companies which are having an exclusive portfolio of BOT projects. Now, the kind of debt that they had taken in and the kind of equity contribution that was required by a whole host of these road players in either bidding for projects and then executing them thereof, I think that did take a toll in terms of how their working capital requirements panned out and how the margins did pan out. But going forward, I think with ease happening on the interest rate front, the working capital constraints should start easing out, which would entail effective and free cash flows to start coming through for a whole host of these companies. With the hybrid toll annuity model system coming in, I think the equity IRRs should be equally impressive for a whole host of these players, specifically catering on the bot side. So specifically, I think one needs to have a look at stories individually, but as a sector, I think we remain extremely optimistic on roads, stroke highway, stroke infrastructure, stroke EPC as a theme.
On the charts, Manav, ITC and TTK Prestige?
ITC has seen a very good breakout today as the prices did see a good gap up opening, and importantly it has closed above the crucial levels of 345. So I think in the near term this stock would actually see a short-term consolidation, and eventually we can see a good run-up close to the levels of 365. TTK Prestige, in fact, a good spike up today on the daily charts, and eventually I think the stock would see this rally continue upside. 4800 is the important levels to watch out for. Once if the stock manages to sustain and close above that, eventually a 20 to 30% rally is definitely due on cards. Most importantly, looking at the overall view on the stock since past few months, it has been on a very good uptrend, so eventually this stock should be a buy on dips.
Okay, fair enough. That's a quick view coming in on some of the movers in the market today. Dish TV also came out with numbers. Subscription revenues hit a 5-year high, but the stock is not doing a whole lot. In fact, it dwindled in the session. We could just bring up the 52-week chart on Dish TV. That'll tell you the story, because I remember same quarter last year, I think perhaps Q1 or Q2 of FY16 is when, they came in with that bumper announcement on profits and, really gave the market an indication that things will only look up from here. Yes, things did look up, but it seems like right now that there needs to be some sort of adjustment in expectations. Is that how you see the story, Mayuresh? It's very much intact, but, it'll not be perhaps a smooth ride from here. There'll be some adjustments.
No, there will be hiccups on the way, and I think I've been repeatedly saying this about Dish for the past 1 to 2 quarters, to say the least. The digitalization story is expected to benefit Dish, because the kind of parity that they will probably get, both in terms of content cost and taxation vis-a-vis the cable guys, and the kind of opportunity that exists is pretty large. However, I think the kind of bumps that they'll receive on the way is going to be pretty hard. So in fact, in terms of the margins that we witnessed this quarter around, the kind of subscription additions that the company is expecting at around 1.5 million net subscriber additions is quite similar to FY16 numbers. The kind of margins that they're expecting around 35% is just going to be 100 bips more than what they have done this year. So clearly, I think with content cost increasing a tad bit is going to take a toll on their margins, with programming costs expected to go up. I think over the next few quarters, even marginally, will have some amount of effect on the way the bottom line and the margin impact pans out. The churn ratio is expected to be more or less similar. You're probably looking at ARPU staying in that 174, 175 rupee kind of a range. So in my opinion, I think the stock will be a performer, a market performer to say the least. But I think one really should not expect too many things in a quarter or two from Dish TV. I think you need to give a sufficient amount of time in terms of both the subscription theme playing out as well as the kind of margin expansion that one really expects from Dish TV.
Yeah, that's a fair point. Gentlemen, stay on with us. We'll head into a break. As we do so, here are Nilesh Shah of Kotak KMC highlighting his market opinion.
if you remove the PSU banks which are still in the cleanup process, I think overall earning base is firmly moving into lower double-digit growth. The June quarterly results might be impacted because of the inadequacy of water and heat, but I think the trend from September and December should be again on the positive side. So definitely the March quarterly results have given hope to the market. On the growth side, we think the consumption cycle will get supported by easy liquidity, lower interest rates, as well as the government spending through 7th Pay Commission and others. Here the sectors which are linked to automobiles, cement, home improvements like tiles, fittings, cables, some of the FMCG companies which are not impacted by competition. These are the sectors and stocks where, depending upon valuation, you are likely to make money. There are two sectors which are right now kind of catching the falling knife. They may underperform over the next 6 to 12 months, but if somewhere you can build a portfolio around them, you're probably going to get outperformance after a year or so.
Okay, welcome back. You're still watching Markets Tomorrow right here on ET Now. Let's look at earnings tomorrow. And Darshan joins in with a quick run through on the estimates of Cipla.
See, for Cipla, we are seeing a 10% revenue growth. We are seeing a 40% profit growth. And as far as margin is concerned, we are seeing a 200 basis point expansion coming in. So we are seeing margins close to 18.5%. Now, as far as the domestic market is concerned, we are seeing a growth of anywhere between 17 to 18%. And domestic market contributes close to 33% of the top line for Cipla. For the export market, we are seeing a 14 to 15% growth, which contributes almost 65% of the top line. And finally, we are seeing a negative to flat growth as far as the export API is concerned. Mainly Pulmicort contribution this time around, as well as partial revenues coming in from the Invagen acquisition that will aid Cipla as far as the top line is concerned. Apart from it, there was weakness as far as Nexium is concerned, but the contribution of Pulmicort this time around will aid revenues this time. South African currency is adverse with almost a 19% depreciation. So revenues from South Africa will be rather muted. Most of the distribution cost that was there was taken in the third quarter. So there will be no one-offs as far as this quarter is concerned. And deferred sales from the third quarter will likely aid the revenues on the domestic front in the third quarter. Other expenses this time around will be lower, but we may see higher personnel cost and other costs given the fact that the Invagen acquisition will come in. But overall, expect a slightly muted quarter from Cipla. There's also a possibility of a possible write back that is doing around. If that does happen, Cipla, the numbers will be pretty much lower than what we are anticipating.
Thanks, Darshan, for that. Tech Mahindra also comes out with earnings tomorrow. Sunita joins us with the estimate. Sunita?
We are expecting a very muted quarter from Tech Mahindra. As far as revenues are concerned, we are expecting a very flattish revenues in dollar terms, largely because the LCC restructuring will knock off roughly about 15 million worth of revenues, although this will be negated somehow by Comviva having a strong quarter in the March ending quarter. We are expecting telecom vertical to remain sluggish, while the slowdown will be seen in the enterprise vertical. Margins are expected to decline by 40 basis points despite the salary hike coming in. Some negation in the decline will happen largely because we are expecting some improvement in utilization rates as well as cost efficiencies to kicking in this quarter, so that should help in maintaining margins. Net profit is expected to decline by 1.5%, largely because of lower margins as well as higher forex losses that we are expecting. But we need to watch out for management commentary as far as telecom deals are concerned, and especially on the margin front, we have seen a substantial decline in margins over the last year. Whether the outlook for margins in FY17 is better. So these are the things I'll be watching out very, very closely. But for now, a very, very subdued quarter from Tech Mahindra.
Thanks very much for that, Sunita. First, your opinion, Mayuresh, from both these earnings tomorrow, Tech Mahindra and Cipla?
As Sunita was mentioning, I think expecting a flattish top line for Tech Mahindra close to the 1,016 million odd figure. What you're talking about in terms of Comviva, I think the enterprise business should hold up for Tech Mahindra. But what happens with LCC and the seasonality related to the telecom business is going to take a toll or offset rather the kind of gains that one really expects to come through. There are a partial component of the salary hike which will have effect on the EBIT margin as well. So the management commentary thereof in terms of their acquisitions, synergies going forward, the order book is going to be key as far as Tech Mahindra is concerned. For Cipla, I think as Darshan was mentioning, I think the revenue is expected to inch upwards anywhere between 8 to 9%. Again, I think the South African currency impact that you witnessed in Q3 is expected to largely pan out even in Q4 with the kind of depreciation that we witnessed. It's got a very strong E&A pipeline, and again, I think a few of the applications have come in through both their acquisitions in Vision and Excellent Pharma as well. And both these companies are expected to probably contribute $250 odd million by end of FY17 to Cipla. What happens between now and then is the kind of added costs that one really associates with the merger, and the kind of expectations on the EBITDA front is also close to around 17.5, 18 odd percent. So I think Cipla should report a reasonable set of numbers. The one-off that we probably saw in terms of distribution expenses last time should not be seen this quarter around. And again, I think the management commentary thereof in terms of the inhaler market, the probability of new launches coming through the next few months is going to be key in terms of their performance going ahead.
Okay, very quickly, Manav, strategies to help viewers approach trade tomorrow?
Yeah, my first buy call is on Biocon. The stock has been in a very good uptrend and has been forming a series of high tops and bottoms. The stop loss can be placed at 625 for an upside target of 665. My second call is sell on Andhra Bank. The stock has actually breached its important support levels and has been trading below its important averages. The momentum looks quite weak. The sell stop loss can be placed at 48 for lower targets of 41.
Okay, Chairman, thanks very much for taking out the time and putting things in perspective for the market session today, and also helping our viewers approach the sessions for the week, especially tomorrow's session, that is. That's time out on Markets Tomorrow. We'll catch you with the markets as always at tomorrow morning at 8 a.m.